Wheat prices are at their lowest in nearly 2 years, even though Russia, as is its wont, rattles the saber and threatens to cancel that deal that lets Ukrainian grain get onto world markets via the Black Sea. You'd think that would tighten the wheat market. We're joined by Ted Seifried, VP and Chief Market Strategist at Zaner Ag Hedge. Apparently, Ted, thanks for joining us. Apparently, it's the prospect of bumper wheat harvest that is keeping prices down.
Well, absolutely. Russia has a lot of wheat, and they do export a lot of that wheat to countries that don't care to sanction them, which is normally their business anyway. So there's a lot of wheat in the world. The USDA here in the United States just raised our carryover as well. So there is that. We do also have problems with our wheat crop, though, which is one of the lowest rated as far as the quality that we've seen in 30 years. So there's a lot of things going on with the wheat market, and it's kind of perplexing that the funds are as short as they are and keeping prices as low as they are. The big question is, what happens if Russia does pull out of the grain corridor, which it sounds like they're going to, because their demands are for the G7 to not limit the exports to Russia. They also want sanctions lifted off of their wheat and, more particularly, most importantly, I think, their fertilizer. So if this grain corridor ends, which at the moment feels likely, wow, that could be about 4 million metric tons of wheat that gets locked up in the Ukraine, and almost 7 million metric, maybe even 8 million metric tons of corn that gets locked up in the Ukraine. So what does that mean for the rest of the world is the big question there.
It's interesting. I mean, farmers always have great lobbying power. Apparently, Hungary and Poland are not happy about all the Ukrainian grain coming through because it's destroying the market for their own farmers. It's coming out by land.
That's absolutely right, Andrew. And that's the thing. When you have a problem with your shipping ports, then you start moving it by truck into your neighboring countries, and that puts a lot of pressure on their local market, too. So the Ukrainians are kind of stuck at the moment. They need the grain corridor. They would really, really be hurt if it gets closed. Now, who else would get hurt? Obviously, there's Turkey. Turkey wants it to continue. But most importantly, the biggest consumer in the world, China, gets a lot of their corn from the Ukraine. And if they don't get that corn, well, that means they have to rely on the U.S. more than they want to. And so, is China going to be a big player into encouraging Russia to keep that grain corridor open?
Longer term, the South China Morning Post has a great story that the Chinese, within a decade or so, want to move towards self-sufficiency in grain. I don't know if they plan to actually get there, but that would hurt the exports of America and Brazil, etc.
Yeah, absolutely. And listen, Andrew, they've been trying to do that for 20 plus years. The problem is that their farming practices aren't modern, let's say. When you look at their average yield for corn and soybeans, they're only a fraction of what we're able to do here in North America or South America. So I don't know, the likelihood of that, it just seems like a long shot. But the point is they're trying to become more self-sufficient, to move away from exports with the United States. They're in the meantime, developing or strengthening their ties with Brazil because they know that they're going to have to continue to source grain from Brazil. But they're doing everything they can to cut the U.S. out of the mix. Now, the interesting thing is that they had bought about 3 million metric tons of corn from the U.S. over the course of the last month. But yesterday, we saw a cancellation of about 10% of that. And that weighed very heavily on the corn market because it begs the question, are they going to continue to cancel a lot of those purchases that they had made, which was a big reason for why corn prices are relatively high? And if that happens, well, then that's going to put a lot of pressure on the U.S. and North American corn market.
Ted, it looks like we might be putting pork fillet on the barbecue this year instead of steak this summer because hog prices keep dropping.
They keep dropping. And, sort of a similar thing that we talked about in the wheat, the funds, your managed money is extremely short in the hogs market, just like they are in the wheat. They continue to push the downside, which I think has gotten beyond where the fundamentals are. The thing is that we don't have as many animals on feed further out in time. So when we get into that summer grilling season, if we are in fact doing that, which, by the way, Andrew, I plan to do the same, well, we can chew through, pun intended, we can chew through that pork supply pretty quickly. So pork prices, I think, are due for a bit of a corrective rally at some point. But what's going to be the spark to get the funds moving out of their massive short position?
We better